Everybody wants the next Nvidia. That's the obsession right now. Every investor on YouTube, every retail trader on Reddit, every finance channel screaming about AI, they're all hunting for the next company that quietly sits underneath a technological revolution before the rest of the market fully understands what's happening. A few years ago, hardly anybody outside the tech world truly understood what Nvidia was becoming. Most people thought it was just another chip company. Then AI exploded. And suddenly the market realized Nvidia wasn't just participating in the future, it was powering it. That's where the biggest money is usually made. Not in the flashy consumer brand everybody already knows, but in the hidden infrastructure underneath the trend. And right now, another technological arms race is unfolding in front of the world. Not AI this time, space. More specifically, satellite infrastructure. Because while most investors are obsessing over whether Elon Musk will eventually take SpaceX public, almost nobody is paying attention to the tiny company helping make Starlink actually function. And the strange part? The deeper you look into this business, the weirder the story gets. Because this is not some speculative startup burning cash with a futuristic PowerPoint presentation. This is a real company, generating real revenue, winning real contracts, solving a real engineering problem that some of the biggest technology companies on Earth desperately need solved. And according to the numbers, SpaceX may already be positioning itself around them in a much bigger way than most investors realize. Now, before we even talk about the company, you first need to understand the problem, because the problem is what makes this entire opportunity so interesting. Right now, Starlink has thousands of satellites orbiting Earth, and that number keeps growing. Every launch sends more satellites into orbit, more coverage, more bandwidth, more users. Millions of people across the world are now using internet beamed directly from space. Rural areas, remote islands, ships, military systems, airplanes, RV travelers, disaster zones. Starlink is rapidly becoming one of the most important communication infrastructures on Earth. And investors understand that. That's why everybody wants exposure to SpaceX before any future IPO ever happens. But here's the issue almost nobody talks about. Launching satellites is only half the equation. Because once all that data is flying around in orbit, you still need a way to bring it back down to Earth efficiently. And this is where the bottleneck begins. Most retail investors never think about this part. They imagine satellites in space, rocket launches, consumer terminals, but they completely ignore the giant invisible system sitting between the satellites and the internet itself. Ground stations. Massive communication gateways sitting on Earth that constantly talk to satellites overhead. Without them, the network falls apart. And the challenge becomes much harder when you're dealing with something the size of Starlink, because Starlink isn't a normal satellite system. This is a mega constellation. Thousands of satellites constantly moving at extreme speeds while transmitting enormous amounts of data across the planet. The scale is almost difficult to comprehend, and transmitting that much data creates a huge engineering problem. Bandwidth. Traditional communication frequencies simply cannot handle the sheer amount of information moving through a system this large. That's why Starlink increasingly relies on something called E-band frequency. Now, this part sounds technical, but it matters enormously for the investment story. E-band offers extremely high-capacity wireless communication. In simple terms, it allows huge amounts of data to move incredibly fast. And for a network like Starlink, that matters because demand is exploding. More users, more streaming, more gaming, more enterprise services, more military contracts, more aircraft internet systems. All of that requires more bandwidth. And E-band is one of the few technologies capable of supporting that future at scale. But there's a catch. Actually, there's a massive catch. E-band signals are extremely difficult to manage. Rain interferes with them. Weather interferes with them. Atmospheric conditions interfere with them. To make the system work reliably, you need enormous power. And this is where the entire story changes. Because suddenly the challenge stops being about satellites and becomes about semiconductors. Specifically, a newer semiconductor material called gallium nitride, or GaN. Now, most investors have never heard of gallium nitride, but inside advanced communication systems, GaN is becoming incredibly important. Because compared to older semiconductor technologies, it can operate at much higher power levels. And for Starlink's infrastructure, that's critical. The problem is, when you start pushing massive power through these systems at E-band frequencies, the heat becomes almost absurd. We're talking about components generating enough heat to literally damage themselves if the engineering isn't handled correctly. This is one of the hardest technical problems in the satellite communications industry right now. And for years, very few companies could solve it commercially. Not in a scalable way, not efficiently, not profitably. Which brings us to the company almost nobody in America is talking about, a small British business called Filtronic. Most investors have never heard the name. It doesn't dominate financial television. It's not constantly trending on social media. And yet, This tiny company may quietly sit in one of the most strategically valuable positions in the entire satellite infrastructure market, because Filtronic specializes in exactly the kind of ultra-high frequency communication systems that mega satellite constellations depend on. And according to the competitor research, they may have solved the exact engineering bottleneck others struggled with for years, not theoretically, commercially. That distinction matters, because lots of companies can build impressive prototypes. Very few can manufacture these systems at scale for real-world deployment, and according to reports, SpaceX is already using essentially all of their production capacity. Think about what that means for a second. One of the most important private technology companies on Earth, reportedly filling this small company's production lines. That's not normal, and once investors start asking why, the story gets much more interesting. The moment you hear that a company connected to SpaceX is trading for just a few dollars per share, your brain immediately wants to dismiss it. Most people assume it must be another speculative penny stock story. A tiny company making big promises, no real business, no real customers, no real technology advantage. But the deeper you go into Filtronic, the harder it becomes to fit the company into that category. Because this isn't a maybe someday business. This is infrastructure that's already being deployed into one of the fastest growing communication systems on Earth. And what makes the story unusually powerful is that the company doesn't appear to simply be selling random components. They appear to be solving a problem that very few others can solve at scale. That distinction changes everything. Because in technology investing, the biggest winners are rarely the companies with the loudest marketing. They're usually the companies sitting inside a critical bottleneck. And right now, satellite infrastructure may be entering one of the largest bottleneck periods the industry has ever seen. Think about where the world is moving. More internet traffic, more AI systems, more cloud infrastructure, more connected devices, more military dependence on satellite communication, more autonomous systems, more aviation connectivity, more global demand for low latency internet. The amount of data moving through the world is exploding. And suddenly satellites are no longer some niche communications technology floating in the background. They're becoming core infrastructure. That's why governments care about them. That's why militaries care about them. That's why Amazon cares about them. And that's why Wall Street is becoming increasingly obsessed with SpaceX. Because whoever controls next generation satellite infrastructure may end up controlling a massive piece of future global communications. But here's where the story becomes even more fascinating. Most investors assume SpaceX is untouchable. And in many ways, it is. Starlink already has a major lead. Thousands of satellites are already in orbit. The network is already operational. The user base keeps growing. Meanwhile, competitors are still trying to catch up. One of the biggest competitors is Amazon's Project Kuiper. And this is where investors should start paying very close attention. Because Amazon isn't competing against a weak player. They're competing against a company that already has enormous deployment scale, real-world experience, and years of operational data. That creates pressure. Massive pressure. Because if Amazon wants Kuiper to become a serious Starlink competitor, they need high-performance communication infrastructure, not eventually, now. And according to the competitor research, that may create a huge opportunity for Filtronic, because remember the problem, E-band frequencies require enormous power. Enormous power creates enormous heat, and very few companies appear capable of solving that efficiently at commercial scale. That's what makes Filtronic potentially valuable. Not because it's connected to SpaceX, but because they may occupy an extremely rare position in the supply chain. A position where demand could grow from multiple directions simultaneously. SpaceX growth, Kuiper growth, defense growth, satellite communications growth, next-generation network deployment. And suddenly you're no longer looking at a tiny niche business. You're looking at a company sitting inside a potentially massive infrastructure expansion cycle. Now here's the part many investors completely overlook. Technology advantages alone do not guarantee stock success. The market has seen countless companies with impressive technology fail because they couldn't manufacture profitably. Engineering brilliance means nothing if the economics collapse. But according to the numbers in the competitor script, Filtronic isn't just surviving, it's scaling aggressively. Revenue reportedly exploded more than 120% year over year. Operating profit surged, EBITDA surged. The company remained debt-free. That combination is extremely important because investors usually expect small advanced tech companies to burn cash endlessly while chasing future contracts. But this company appears to already be generating meaningful profitability while demand accelerates. That changes the psychology around the stock. It stops looking like a lottery ticket and starts looking more like an emerging infrastructure supplier entering hypergrowth. And there's another detail buried inside this story that could matter enormously: order visibility. According to the competitor research, roughly 90% of expected annual revenue was already backed by signed contracts and confirmed orders. That's huge. Because one of the biggest fears investors have with small technology companies is uncertainty. Will the orders continue? Will customers disappear? Will growth collapse next quarter? But when a large percentage of revenue is already sitting in the order book, the business becomes more predictable. And predictability changes valuation, especially in a market increasingly desperate for real growth. Now let's talk about the most interesting signal in the entire story. Not the technology, not the contracts, not even the growth numbers. The warrants. Because this is where things stop looking like a normal supplier relationship. According to the competitor script, SpaceX didn't simply become a customer. They negotiated warrants tied to commercial milestones, and if you're unfamiliar with warrants, they're essentially rights to purchase shares in the future under specific conditions. In other words, SpaceX potentially positioned itself to own part of Filtronic as the commercial relationship expands. That matters psychologically. Because giant companies don't usually structure deals this way unless they see strategic importance. And the market notices these signals, especially when they come from a company like SpaceX, because investors know how aggressive and calculated Elon Musk's organizations tend to be when securing critical infrastructure. And if SpaceX believes this technology matters for future satellite deployment, that could become a very powerful narrative over time, especially once retail investors fully discover the stock. But the story still gets bigger, because according to the competitor research, SpaceX didn't stop at current E-band systems. They reportedly pushed Filtronic toward future frequencies as well. V-band, Q-band, higher capacity next-generation communication systems. And this is where investors need to zoom out, because the long-term vision for Starlink is far larger than basic satellite internet. Much larger. We're talking about airplanes, autonomous vehicles, military infrastructure, remote industrial systems, maritime networks, global AI connectivity, direct-to-device communication, high-speed worldwide broadband, potentially billions of connected endpoints over time. And if future generations of Starlink require even more advanced communication hardware, the demand opportunity could expand dramatically. That's why some investors may eventually stop viewing Filtronic as just a supplier, and instead start viewing it as a strategic infrastructure enabler sitting underneath the future satellite economy. But before anybody gets carried away, there's another side to this story investors absolutely need to understand, because the biggest opportunities in the market almost always come with real risk. And in this case, the risk is impossible to ignore. Here's the dangerous part about stories like this. When investors hear SpaceX exposure, hidden infrastructure, triple-digit growth monopoly positioning, next-generation satellite technology, the excitement can become overwhelming very quickly. That's usually when people stop thinking critically. And if you're going to understand this opportunity properly, you also need to understand exactly where this entire story could break. Because while the upside narrative around Filtronic is incredibly compelling, the risks are just as real, and the biggest one is obvious: customer concentration. Right now, according to the competitor research, SpaceX represents the dominant portion of Filtronic's forward business. That's both the reason investors are excited and the reason the stock could become extremely volatile, because dependence cuts both ways. If SpaceX keeps expanding aggressively, if Starlink deployment accelerates, if next-generation V-band systems scale, Filtronic could experience explosive demand growth. But if anything changes inside SpaceX's strategy, the market reaction could be brutal. And this is where investors need to think like institutions instead of gamblers, because the market doesn't just price opportunities, it prices dependency. Imagine SpaceX eventually deciding to bring certain manufacturing capabilities in-house, or imagine they discover another supplier capable of competing at scale, or imagine future satellite architectures evolve differently than expected. Any one of those developments could pressure the business heavily. That's the uncomfortable reality of owning smaller infrastructure suppliers tied closely to giant customers. You're effectively betting on the continuation of the relationship. And while the warrant structure between SpaceX and Filtronic is incredibly encouraging, it doesn't eliminate the risk entirely. It simply aligns incentives more closely. Now, to be fair, the alignment here does appear unusually strong, because according to the competitor script, SpaceX doesn't merely buy products from Filtronic, they reportedly structured commercial milestones tied to equity participation. That creates a different dynamic. Instead of simply being a vendor, Filtronic starts looking more like a strategically important ecosystem partner, and that distinction matters enormously in technology markets, because once a large company becomes deeply integrated with a supplier's technology stack, switching becomes much harder, especially when the supplier specializes in highly technical systems involving advanced frequencies, thermal management, semiconductor integration, proprietary manufacturing expertise. This isn't like swapping generic hardware components. These systems sit inside mission-critical communications infrastructure, and that gives Filtronic a potentially defensible position. But there's another challenge investors need to understand: scaling. One of the hardest things for small advanced manufacturing companies is surviving rapid growth. Ironically, hypergrowth itself can destroy businesses because once demand suddenly explodes, everything gets harder simultaneously. Manufacturing, supply chains, quality control, hiring, production efficiency, margins, delivery schedules. A company can go from fast growing to operational chaos very quickly. And in industries involving aerospace-grade communication systems, mistakes are expensive. Very expensive, especially when your customer is a company operating one of the most sophisticated satellite systems ever built. That's why execution risk here matters, because even if demand remains enormous, the company still has to deliver consistently, and investors underestimate how difficult that becomes during aggressive scaling cycles. Now, despite those risks, there's a reason this story continues attracting attention. The numbers, because when you step back and look at the financial trajectory, it starts becoming clear why some investors believe Wall Street may still be underestimating this company. According to the competitor script, revenue grew over 120%, operating profit surged over 270%, EBITDA exploded, the company remained debt-free. That combination is rare, especially in a small-cap advanced technology business. Usually, companies growing this quickly are burning mountains of cash trying to survive. But Filtronic appears to be generating real operating leverage. That changes investor psychology dramatically, because now the story stops looking purely speculative. It starts looking like a company crossing from niche supplier into potentially strategic infrastructure provider. And then there's the valuation. This is where the market psychology gets extremely interesting. At roughly a few dollars per OTC share price, many American investors simply ignore the stock automatically. That's how retail psychology works. People associate low share prices with low quality, but sophisticated investors care about market capitalization and future cash flow potential, not the number printed on the share itself. And according to the competitor research, the company's market capitalization remained relatively small compared to its growth profile and strategic positioning. That creates the asymmetry investors look for: limited market awareness, rapid growth, strategic industry positioning, powerful customer relationships, emerging technological importance. Those ingredients are exactly what can create violent re-ratings later if institutional attention increases. And this is where the SpaceX angle becomes psychologically explosive, because SpaceX itself has become one of the most emotionally powerful private companies in the world. People don't just view it as another aerospace business. They view it as the future of space, the future of communication, the future of launch systems, the future of global internet infrastructure that creates enormous narrative power around companies connected to its ecosystem. And investors know what tends to happen when Wall Street suddenly discovers hidden suppliers tied to transformational trends. The re-ratings can happen extremely fast, especially once major finance creators, newsletters, hedge funds, and retail communities begin focusing attention on the same stock simultaneously. And right now, Filtronic still appears relatively unknown to most American investors. That's important, because some of the largest stock moves happen before mass awareness arrives, not after. Once CNBC starts discussing a company daily, once every finance influencer covers it, once every retail trader already owns it, the asymmetry often disappears. The hidden infrastructure phase ends. And that may be why some investors are becoming increasingly interested in stories like this now rather than later. Not because the company is guaranteed to dominate, but because the market may still be early in understanding what role these communication bottlenecks could play in the future satellite economy, especially if the world keeps moving toward AI-driven infrastructure, global connectivity, autonomous systems, edge computing, military satellite dependence, low latency worldwide communication. Suddenly, these invisible hardware suppliers don't seem so invisible anymore. They start looking foundational. And if that shift in perception happens broadly across the market, the valuation conversation around companies like Filtronic could change dramatically. But there's still one final piece of this story most investors haven't fully thought through yet. And honestly, it may be the most important part of all.